please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Ganeshram Jayaraman of Spark Capital Advisors joins us now to talk about the markets and, of course, the hot topic, right? The banks and the scams that we've seen so far. Ganeshram, good morning. Thanks so much for joining us.
Morning.
You've been tracking the banking sector for very long. What have you made of the recent scams that we've seen, and at what point would you advise a buy, if at all, in any of the PSU banks?
I think we are looking at these scams as possibly a one-off event. They're not going to, influence our longer-term investment decision. But the broader point is the asset quality cycle, has it come to an end? How do you see the rate environment? How do you see the impact of these on growth, on margins, and asset quality going forward? Impact of bond yields, the pressure of them on treasury losses. Credit costs, they're going to remain high. PSU banks will continue to see a capital challenge, and dilution below book value is a live risk there. So some of these will appear value on paper, but it's a bit like a mirage. Go closer, you realize that the dilution is going to happen below book value, and as a result, the stocks are not as cheap as they appear on paper today. So any PSU bank which is trading below book value, we will stay away still, though they are value. We think they are value traps. Private banks, definitely yes, not all of them, selectively. Our preference is changing more and more away from the wholesale liability financials. Not just banks, not just NBFCs, definitely they are, even some banks. So the wholesale liability franchises are the ones we are trying to stay away from. So it's CASA, retail liability, and the safe haven asset quality banks where we are heavily positive still on.
I take your point entirely that we are making too much of a fraud which is genuinely one-off, and 13,000 crore in entire banking sector balance sheet of 110 lakh crore, we should get the perspective right. But, the noise about NPA, now we know the full number. I mean, anything that is stressed and standard has already become NPA. And those banks, like for instance ICICI or Axis, are excellent liability franchises. Correct. If you say you're moving away from wholesale, then is there at some point, ICICI at 300 or whatever, Yes Bank at 300, at some point don't they become a buy? The private banks, because they also will be able to get the public sector banks abdicating space.
True. We are still underweight on banking or financial services in general. Okay. Within private banks, we'll be more like overweight within the retail liability franchises. Okay. But yeah, some banks a lot more preferred than others in the same space. Okay. I can't basically draw all the entire private banks with one brush.
Okay. Ganesh, good morning. Looking at your strategy report, you're talking about emerging all-weather managements, and two names which stand out for me, Ashok Leyland and Bharat Forge. Your thoughts on what's going so spectacularly right for a stock like Ashok Leyland and even Bharat Forge, which has also been doing quite well?
See, the way we are trying to build a portfolio today is try to buy stocks with two things in mind. One is managements who have a track record of performing irrespective of cycle. A 10-year track record which tells that these managements have historically done well irrespective of commodity cycle, rate cycle, exchange cycle. And then the second bucket is managements who have reduced their cyclicality a fair bit of late, increased the proportion of in their business mix, their past vulnerabilities. Some of the names clearly fit into that bucket. If you look at the rear view mirror, you might say that they have been past vulnerabilities show up, but we believe they have improved a lot on those historical challenges.
Okay, the other space that you are bullish on, I guess, is the capex cycle recovery, because of course names like Ashok Leyland and Bharat Forge feature, but there are other names as well. There's Voltas, there's Thermax, and we were speaking to some of these managements. They indicated that they haven't seen this kind of a pickup in terms of activity in a very, very long time. Is there still a lot more value here?
I guess private sector capex is inevitable at some stage. We don't see clear signs of visibility of that right away. I don't see that to happen in FY19. We don't see that. But Middle East can surprise us. With the way oil is shaping up, Middle East can show some signs of pickup. The first signs of capex recovery in the Western world is already showing up. So clearly we are trying to pick stocks which are not just oriented towards domestic capex recovery, but also overall the rest of the world.
Okay, this is news coming in that Edelweiss announces binding arrangement for acquisition of Religear's securities business. That binding arrangement ends on March 15th.
No, this is about the acquisition. This is only the binding arrangement.
Just announcing
they're just announcing the binding arrangement that ends on the 15th. So this is in continuation of their disclosure that dated December 20th about the acquisition of Religear securities.
It's just that they're finishing the process. Okay, sorry. Ganesh, just to come back to finance, which part of the NBFC business would you stay in at all?
1 second. Lata, I just want to read this out just to clarify. We hereby inform you that due to the seller's inability to obtain the requisite clearances, so the deal has actually fallen through. Religear failed to obtain requisite clearances in a given timeline. The binding arrangement has now come to an end. So it's not that they've cleared it, it's actually come to an end, it's fallen through the acquisition.
Yes, I guess today what would happen, of course, Religear could fall, but Edelweiss could rally, because a lot of people thought, why were they getting into Religear's business? And, that is going to be a problem with some of these companies, on the face of it, some assets look good, right? But you don't know when you do the proper due diligence and when you try to see the books inside, you just don't know, and that of course is going to be a problem.
Yeah, actually my question was also a bit triggered by the Edelweiss news. Stocks like Edelweiss, Motilal, IIFL saw a lot of buying because they were very good wealth managers, and that perhaps will not die away. So in that NBFC space, what would you like? I only see Aditya Birla. Oh no, that's Aditya Birla Fashion. I don't see any NBFCs.
Mahindra Finance is one stock that we have liked. Rural financing is something that we still think has a recovery likelihood going forward. That's a space where the tractor financing or even various other rural is something that I think government will like to put money back into people's pocket, and growth or improvement in asset quality cycle is something that we see possibly playing out there. And those segments, pricing power is a little level. It's not the cutthroat like home loan segments which you see in that segment. So that's one pocket. Again, we need to be a little more watchful, in general on NBFCs.